Hello, and welcome to Look Back, Look Ahead. I'm Frank Calderone. Last week, ending June 4th, the major indexes gained as better than expected job numbers and other economic data moved investors to the buy side. The manufacturing sector remained in contraction territory for the fourth consecutive month, although improved slightly compared to May. Tariffs and economic uncertainty were the issues. Construction spending was weaker than expected in May as private construction continued to decline while public construction was slightly higher. Job openings were much stronger than expected in May, with most industries showing an increase. Job growth increased by a stronger than expected 147,000 during June, 74,000 in the private sector and 73,000 in the government sector. The unemployment rate declined from 4.2 to 4.1%. Markets were expecting an increase to 4.3%. The service sector came back to expansion territory in June after falling below the demarcation point of 50 in May. And after several months of skyrocketing imports that swelled the U.S. trade deficit, the trade sector is coming back to normal with no measurable effect on the size of the deficit as tariffs continue to settle in. Year to date, the Dow is up 5.4%, the S&P is up 6.7%, and the Nasdaq is up 6.7%. The yield on the 10-year U.S. Treasury bond is 4.35%. Oil closed at $66.95 a barrel. Gold closed at $3,327.81 an ounce, with silver closing at $36.83 an ounce. For this week of July 7th, we don't have a very busy week of reporting. Tuesday, we'll get the NFIB Optimism Index and consumer credit data. Wednesday, wholesale inventories will be reported. Thursday, we'll get initial jobless claims, and on Friday, the monthly U.S. federal budget will be reported. If you have any questions or anything you've heard in this video, please give us a call. This is Frank Calderone from Raymond James in New York. Have a fantastic week. Be well, stay safe, and remember, always look ahead.